The December CPI report is out, and I don't think I've seen such delusion in the markets. CPI inflation has dropped to 6.5%, and somehow everyone is cheering for it. Do they not understand the economy is still in flames and they're hoping for the arsonists to pour more fuel on the inflation fire? And this is very bizarre. But I want this message to be very clear that we are still in an inflation hell and we cannot afford to be delusional. A Fed pivot isn't coming. Even a Fed pause isn't here yet, guys. Every time the CPI number comes out, we are seeing a heavily fabricated report where they only show us one number, but the reality on the ground is much different. So let's go through the numbers and you quickly see why inflation is still a problem and why the Fed can't reverse course just yet. And the devil truly is in the details. Now, in the CPI report, we can see that the greatest fall comes from energy, which has decreased by 4.5% from November, but food inflation is still insanely high at 10.4% in December, right? And that means prices in the grocery store are still going to be painful, especially if you're buying meat, fish, and eggs. All of these are up over 15%. But what's really concerning is the price of rent, which is on a tear. Shelter cost has been rising non-stop for the last 24 months, and it is at a peak of 7.5% in December again. So I really want us to sit back and understand the implications of all of this. The bulk of people's paychecks, which is food and rent, is being eaten up by inflation. People's savings are going to be depleted sooner or later, and we're going to hit a wall where spending just collapses, right? The Fed cannot afford to pivot because the battle for inflation has not been won, and the longer inflation rages on, the bigger the wealth divide will be. But the Federal Reserve, they are trapped because in order to crush inflation, Jerome Powell will have to sacrifice the US economy and the world economy at the same time. Because the longer the Fed keeps rates high, the higher the probability of the economy cracking. And if you roll the dice long enough, you're gonna get snake eyes sooner or later. And I want us to listen to the Fed's language and their forward guidance because every time the Fed looks to raise interest rates, they have been telegraphing the move first, they've been telegraphing the punch to allow the markets to price in the hike before doing the actual hike. And just like magic, the market rallies or stays stable after the Fed delivers on their promise, right? If you actually notice, that is the playbook Powell and friends are using. So what we have today are multiple Fed presidents, one from the Bank of Atlanta and the other from the Bank of Philadelphia, coming out to say a downshift is coming. The world should prepare for 25 basis points hike. And the markets, they are pricing this in with a 95% probability that the Fed will only raise interest rates by a quarter of a percent. But notice the language, guys. The Fed is still hiking and they haven't breathed a word about pivot or even a pause yet. Powell, he understands that prices are still unstable, right? And he wants to get to the promised land of 2% inflation. And in order to do that, rates have to go higher and stay high for a prolonged period of time. And the problem with today's inflation is that it has become sticky. When you take out food and energy, core inflation has actually increased to 6.6% in December, hitting an all-time high, still significantly higher than the Fed funds rate, telling us that higher prices are starting to get entrenched, and the longer prices stay high, this is going to feed into higher inflation expectations, which is what the Federal Reserve is truly afraid of. When higher inflation is priced into people's brains, they will start demanding more wages and start spending immediately, right? Because what's the point of saving money? And this feeds into the specter of even higher inflation. Now, we have the inflation expectation dropping in a 1 year period, but the 5 year inflation expectation has gone up. And if we look at household income growth expectations as well, it has hit an all-time high of 4.6% in December. People are demanding higher wages, but if they get it, it will just drive inflation even higher. And that's why the Federal Reserve, they cannot afford to pivot, they have to keep rates high. Now, if you recall the Fed's mandate, it is all about maintaining stable prices and maximum employment, just these two things. Jerome Powell, he doesn't care about the stock market or the price of gold. All he cares about is driving inflation down, right? The Federal Reserve's credibility is really on the line this time. They can't actually create food or oil. The Fed has no way to directly influence the supply side of the equation. All they can really do is to destroy demand by making more people unemployed. People have to lose their jobs. And what Powell wants to see is unemployment start to go up as the level of inflation starts to come down. And the Fed has been saying that they expect unemployment to rise all the way to 5 or 5.5% before the inflation fight is over. But what do we have, guys? A robust and strong job market that doesn't seem to cool down. The US economy added 200,000 new jobs in December, which is double the amount that Powell wants. It is still too high and a signal that there's still room left to tighten. Yes, we can see job growth is starting to drop, but it is not fast enough. From the current trend, it will take at least another quarter or two to get job growth down to 100 grand. Now, this is a big problem because wages are still climbing and these new jobs are paying higher than in the previous months. We know wages aren't keeping up with inflation, but the Fed only cares about people getting paid more, right? And to them, new jobs mean higher pay, and higher pay means more inflation. And if we look at the unemployment rate, we are just at 3.5%, another record low. Now, if space aliens they take a look at this statistic alone, they would assume that the economy is robust and we are in the midst of a raging bull market. That's why the economy today is very misleading and very confusing. We should be in a recession by now, guys, but by all indicators, the economy seems to be fine. The patient is resistant to higher rates and Powell has no choice but to up the dosage, right? But let's also not forget about the US dollar. One reason why inflation in America isn't that bad compared to the rest of the world is because of the strengthening dollar in 2022, and the Federal Reserve cannot afford to let the US dollar crash further by pivoting and easing rates, right? The dollar index had been rising since the start of 2022, hitting a peak of nearly 113 in September. But what we have now is the dramatic reversal and the crash of the dollar strength down to nearly just 100. The dollar has been crashing against other currencies and giving up their prior gains, and this is very problematic for the Federal Reserve. The problem with a weaker dollar is that now imports to America become more expensive because as the dollar weakens, everything becomes more expensive, right? Especially commodities. And that's the double-edged sword when everything is priced in a reserve currency, the dollars. Oil becomes more expensive, food costs more, and that's why we are seeing the price of gold rise as well. So if the Federal Reserve stops the hikes and reverses course now, we could see inflation spike up just from the crashing dollar alone. We have to understand that we are in an environment of rising interest rates around the world. Even Japan is allowing rates to rise because they know they have no other choice but to destroy demand to bring down their local inflation. And this is putting additional pressure on the US dollar. So if the whole world is raising rates and the United States decides to pivot and lower theirs, this is going to destroy the dollar and send capital away from the US. Investors will sell the dollar because they aren't dumb, right? They can put two and two together and realize, hey, the Federal Reserve is lowering rates and printing money all over again. The dollar is about to be abused and misused, and it's time to get out. And that's why, even though I believe the Fed will pivot down the road one day, it's not going to be during this period when the dollar is crashing back down to a 5-year low. And remember that the Fed only cares about fighting inflation and not asset prices. By hiking rates and keeping them high, guys, it is strengthening the dollar and making imports much cheaper for America. The Federal Reserve is actually doing the right thing to fight inflation. I hate to say this, but they're actually doing the right thing. Obviously, they aren't doing it aggressively enough, and Powell isn't a Powell Volcker, not anywhere close. But if they let inflation rage on for another year or two, we will see a new slave class in America and around the world. Assets like home will forever get priced out of reach, and a new generation of people will be working 2 jobs, 3 jobs, but still living from paycheck to paycheck. That's how tragic things can get. And I honestly believe that the markets are not pricing in reality yet, and Wall Street is still delusional. Every time inflation data turns out better than expected, everyone starts calling for a pause or pivot. But if we dig a little deeper, we can see there's a hidden danger coming up that could make the Federal Reserve continue to hike. Right now, we have the G7 thinking of slapping Russia with another price cap, but this time it is targeting Russian oil products. And the big problem with this is how it will probably backfire again and cause the global oil price to spike, especially in the West. Now, I'm not saying that it won't hurt Russian revenues. The previous price cap might in fact be working because Putin is selling a lot of discounted oil to China and Russia, and the euros are priced at $56, which is lower than the $60 price cap. However, the supply is going towards Asia, China and India, and not the West. So if the G7 slaps another price cap, we could have oil products such as gasoline, kerosene actually rise in price in the United States and Europe. And obviously, this isn't good news for inflation. But here's an interesting fact, guys. The United States is a net exporter of petroleum products like gasoline, diesel, and kerosene. And just in the first half of 2022, America exported 6 million barrels a day of petroleum products, right? And they're going to export these products at a higher price to Europe in the future if the price cap really comes online. And this means the GDP data for the US could actually improve in 2023. It is the same situation back in Q3 last year when everyone was surprised when GDP rose by 2.6%, breaking a trend of 2 quarters of negative growth. America did dodge a recession because there was a surge in exports thanks to the oil industry, which actually decreased the trade deficit, allowing the US to post a positive Q3 GDP. Now, we all know this isn't a true recovery because other sectors, they're still being crushed by higher rates. But the Federal Reserve will take this data point, this one data point, as a bright spot that the economy is fantastic, right? So not only could another price cap make domestic US inflation soar, it might actually twist the arm of the Fed to keep rates high because the economy is still strong enough to handle it. And this is the hidden danger that's looming on the horizon that many people aren't pricing in just yet. Now, if the G7 can impose a price cap once, they sure as hell can impose it a second time. And this brings us to where I believe rates will go. Now, I've been calling for rates to hit at least 5% for many months now, and I'm still sticking to that prediction. I believe the Fed will continue hiking by 25 basis points until we reach 5% or maybe slightly higher, and then keep rates high for at least another 6 months. Now, Powell, he wants to see inflation convincingly crash down towards 2% before he will even think of a pivot. And remember what I said about the Fed forward guidance. We have multiple people from the Fed coming out to say rates will still head higher. We have Mary Daly saying that rates will go above 5% and Kashkari seeing rates hitting 5.4%, right? They want the markets to price in the pain first before reality catches up over the next 6 months. So we have to prepare for further pain down the line in the markets because once the Fed hits the pause button, it is not a cause for celebration because we do not know how long the markets can stomach rates above 5%, right? We're already seeing a retail apocalypse which is hitting companies like Amazon, which is cutting away 18,000 jobs, and big banks like Goldman Sachs is moving to shed 3,200 jobs as well. Higher rates are bleeding the country dry. People don't have enough money to spend, and taking out loans at such high rates is just plain crazy. And it's really time to brace ourselves for chaos because the Federal Reserve doesn't care about the economy. They are inflation fighters, and inflation is still a clear and present danger. It is the race to see if the Fed can bring inflation down to 2% first or if the economy crashes before they do. But let me know what you think in the comments below. How high will the Fed raise rates to? Will the economy survive or will Jerome Powell crash the world? Let me know in the comments below. Stay safe, be sure to smash the like button and subscribe as we navigate through these inflationary times.